Hi, hello, and welcome. This is Ben Esra from Matrix Global FX. How are you guys? I hope you guys are doing well, and it has been a very um, quite week, but the starting stage of this is seen in the a lot of currencies depreciating against the dollar, you know, and we couldn't expect a lot of moves before the US PMI data that is coming around today, and we also expect a lot of other PMI data from UK and Eurozone. Apart from that, we are looking at how the Japanese yen will create some kind of a noise regarding the BOJ rate decision. Today, the BOJ Governor Yuda was saying in the parliament that inflation has not at all been rising in the Japan, so they are not looking at rising rates, but probably they could hold by hawkish moves, but maybe the currency intervention will not solve the underlying problem Japanese are battling right now. And if you look at other currencies like the Malaysian ringgit and other Asian currencies like Indian rupee, Chinese yuan are also depreciating against the dollar. Even the Chinese economy is slowing down. It has shown some kind of positive numbers in terms of quarter GDP growth and other numbers, but the industrial production has been very dire, which we have said earlier. Of course, I also look at the South African rand. Rand has been having some kind of speculative moves from 18.78 in the last week to the 19.38 levels on Friday. So it has moved very significant because of the fact that, as Robert Petrusizar has always say regarding the South African rand, that there is some inherent problems going in the South Africa. So elections are going to be held in May, which could cause some nervousness in the financial institutions regarding the South African rand. So if you want to speculate in South African rand, you have to look at the numbers. You have to look at how the charts and the technical ratios evolve over time. I request you to look at the daily chart, weekly chart for betting on the upside moment of the US dollar against the South African rand. And probably we are also having Australian CPI data coming from the Australian, and I hope that inflation will be more or less sticky in Australia, which could keep the Aussie under bid against the dollar tomorrow. Maybe that's what our research institution Angry Methodist has said. And yesterday, the Eurozone economy governors, ECB governors were saying that rate cuts, 100 basis points rate cuts are possible. So the rate deviation expectations has slipped in favor of dollar, and it pushed the euro back down, but it's not a very good environment for trading FX, because of the fact that when leverage is used by the traders to trade euro dollar currency pair, so it will be very tough for the traders to create some kind of profitable opportunities, because it lost 20 or 30 pips after the any comments, and it rose again to the again to the back to the level. So it creates some kind of choppiness, because everything is priced in by the market right now regarding the eurozone. So any incoming data, maybe the German industrial production or German retail sales, or any kind of upward revisions in the US growth, especially the inflation data, could maybe depreciate euro further, which I believe this is especially true for the sterling. Right now, I'm not looking at all currency pairs to trade. I just look at the data, how things will evolve, especially the inflation data, GDP data, and other tier 1 data, to look at how things will evolve. This week we have only GDP growth data coming from the US, and PCE data coming from the US, which will show how inflation has been going up, which is the PCE is the FID is very important metric for understanding inflation dynamics in the US. And I hope that you guys will look at these choppiness as not an opportunity, but look at this wait at the sidelines, because you guys employ leverage like 1 is to 100, 1 is to 200, which is not at the satisfactory level to trade the choppiness conditions. So if you want to trade for a long period of time, I just wanted to assure you that you could take trades with the leverage of 1 is to 30 or 1 is to 20, which is fine. In some cases, you can hold the currency pair if you are right on the direction of the moves, but the day traders are advised to be extremely cautious and use stop loss as early as possible, because you cannot understand how things will move on from here, especially in the currencies. And yes guys, this is my short term understanding of what's going on the market. I'm not trading right now because it's sideline. I just stopped out yesterday for 3 times in the euro dollar, and I'm just looking at the South African rand. If I can get some opportunity, I will update it. Yeah, thanks and take care. Bye.